let's just get into it. Trying to be precise here. Not trying. We finna be precise here. Looking at AUD USD, a review of a trade that I was taking today. I want to go over it, really just break it down, really analyze it before I get into everything else. Pull up the different time frames, so kind of just give a brief overview. Once again, it's AUD USD, currently on a 30-minute time frame, looking for a supply here from the. I'll do a quick flash of the EMAs real quick. Fake breakout of the London Asian high break. So if this is our Asian session, this is the start of the day. Accumulated, broke bearish, London buyers into the market, broke Asian highs, false high, false settle to then come back down. Nice bearish engulfing. This closure, this 4 a.m. candle at 4:30. Nice sell. Came back in right here at the opening of New York. Rest is history. Nice fair value gap on a lower time frame as I zoom in there in a second. But this overall range is identifying the supply from these two candles, pushing the market down. There you can recreate that using the fib right here at the institutional level at that 9400 is what I'm looking at, or mainly seeing. Beautiful level, beautiful sell, going down to the negative 13 extension levels. But let's go ahead and break it down to the way I like to. And we can leave that line on there, I guess. We know what it is. The main thing for me is Confluence, right? I like to use the EMAs for a visual representation of structure to add to that confluence. But there's other many things that I have in price action, etc., etc. In fact, let's go ahead and build a sticky note. Let's roll on the same page. And I'm gonna bring that there. I actually believe, where's my note list? There should be a full thing. It is, but I recreated it. And here it is right here. So let's go ahead and take this list. Right here and copy it. Boom. All right, so if you notice that the supply, demand, and also the engulfing, these are going to count as two. I'm bolding these as well, just so we can see them. Now for me, the main thing that I'm noticing here is the engulfing that happened at the 30-minute time frame at 9:30. Now I'm gonna bring my indicators on because I can visually see, and we're going to rebuild. So we'll take these off. I'm gonna go to another chart, whatever that is. What am I currently on? FX again. So let's go to Oanda. Right, I'm gonna bring the indicators on and I'm gonna break it back down. That way, we can all be on the same page and I can really explain what I see. And we're gonna walk down a replay using a 5-minute time frame. And we'll start it right there at 9 o'clock, right? Now, once again, I'm looking for a confluence. So upon these list of things, I'm waiting for something along this line to happen. Obviously, we can see the full time here listed on the hourly, 30 and 15 minute, but I'm gonna walk us down on the 5 so we can all be on the same page for what I was looking at that time. Right now, we've had an 8 a.m. open and bullish markers come into the market. The whole reason I was looking to sell, if you look upon the 30-minute time frame, the main thing I'm seeing here is the red EMAs, especially before price got up here. I see we're in this big bearish trend. Like I said, I saw we had a false breakout in Asian session and price just pushed back up. Now, all that's good and dandy because I saw all that, and even in the trade, I ended up losing. That's why I wanted to break this down so I can get into specifics on why and where and what, when. You feel me? So we're gonna use the 5-minute time frame to walk us through that. if you see here, all this is to me is just a retracement back up. The first thing we need to actually use to identify what we're retracing besides the EMAs here, because the EMAs are just visual. I don't really need the EMAs. So we'll start with the fib, measuring from this high to the low. And we'll just make it a regular fib. And the main thing I saw was at the moment price got above the 60%, 618, it the moment it came into contact, especially 9450, that whole institutional level, we're seeing major rejections, especially if you want to consider this as some type of supply, but there's actually a gap right in there, which price is filling. And then price is reacting off that level there. So that's pretty cool to identify, pretty cool to see. But cool and dandy until we get some type of break, some type of signal, some type of confluence. Right now, it's just retracing. So for me, on the list of what I see, the first thing I'm going to add is fib rejection. We'll add this here. I'm buffing this up. Make this into confluence. And like I said, the first thing I see is fib rejection. Now, as well as I'm going to go ahead and draw the level of supply I was looking to react off of. Now, it's going to be different on many different time frames. The final one that I decided to use was a 30-minute, because this is the cleanest that it looked in terms of live and as and etc. etc. Put on 15, but it's actually at 30, right? And within this price, like I said, is also filling in the fair value gap. So we'll bring this fair value, take this into a fair value gap and change that color back, and even make this black so we can see what's going on. No, I'll leave that like that. And once again, these are light confluences. So for me, I need a setup grid. I'll go ahead and bring this up as well. My setup grade is like this, and we'll put this at the bottom here just so we can make, no, that's too much. We'll turn this into another tab of its own. Boom, boom, boom. All right. Hopefully this won't be too much as I'm explaining. Let's try and put this out of the way in some type of way. Over here. It's good? No. You just got to fight with it. Anyways. One confluence is not enough. So we're getting fib rejection. We've noticed that we've had a reaction here of the, whatever you want to call these candles here from the London, but we're really looking for price to get into this fair value and here in this imbalance. This first candle right here at 9:15 was the first candle that had done so. So as we see price continue and now give us a first break, I'm gonna bring on the EMAs. This purple EMA here, stick with me. If it gets too blurry, apologize, but I'll try to do my best. I'll hide the drawings. This 800 EMA here, it's important to know when you're looking at your different time frames. Remember that there's still a major level of selling pressure we're looking to go to the downside here. And when I saw price looking bearish here, the rejection, I was already interested in the trade for many other reasons, but I saw that price could not get into anything above here. So I was not scared to place my stop loss up here, looking into confluence with that supply. So as I bring my indicators back on and I go to confluences, we're actually going to put up here supply in all caps. So in terms of grade, we're going to do it grade A. Oh no, grade C. Because remember, we still only have two confluences. Now, I'm about to speed up and kind of let more happen, let more flow, but speak as it happens. Right now, we are in the 5-minute time frame, and within 9:25, 9:30. All right, the closure of this is the opening of the New York Stock Exchange. I'm going to add EMA under the confluence once I have more rejections upon certain time frame. So I'll kind of rewind here with the 15-minute here as well, just so we can not get any confusion. Every 3 candles here on the 5 minute is going to represent one 15-minute candle. So this 9 to 9:15, boom, to now 9:30, is actually 9:45 when we go up here. So 9:30, 9:40, excuse me. And then the closure of this 9:45 candle is actually 9:50. So this right here, just know that this 9 red candle right here, the closure of this 9:40 is the opening of 9:45. So when this next candle does this, know what that is. Know what this instant rejection is. What I'm saying all this to say is I'm having bearish pressure here. But notice how on the 5-minute time frame, if you know what you're looking at, this aqua is the 50 EMA. It pulled back equally into here and actually played as a nice demand, but we're not gonna get into that. Push back up and notice the instant boom, rejection back down. This right here is not an engulfing, it's an LL. If you know what an LL is, it's actually reversing back into what's going to shift the price on the 5-minute time frame, which I'm going to go ahead and put this 5-minute time frame candle here. This is the actual entry upon multiple reasons. So I'm going to go into Confluence and add that now. As we bring our indicators back here, we can actually hide the indicators, excuse me, and leave our drawings, because I'm going to go into more in depth on what we have. So what we have is an engulfing. We also have let's see, break BOC. Is there a break of candle upon the supply? So within supply and within engulfing, I need a second signal. What I mean by a second signal, if I'm in a supply, right, and price comes into my zone, which I'm looking at the 30-minute, I need price to reject the zone. I need price to give me a confirmation that this supply is active, a BOC, a break of the candle. And I'm gonna highlight and mark that with the opening of the candle that's going into the zone. So if we're looking at supply, we're looking to sell, I need a bullish candle to then reject down and then give me another candle to break that rejecting bullish candle. The opening of that is the breaking point that we're going to be notified. All right, we're going to notify the opening, and then we're also going to notify the wick, because many different things happen at times, and etc. etc. I'll go into for different reasons later. When you're in live time here, and I'm using the 30-minute to confirm it, I'm having many different 5-minute candles here close and push further away from the zone. So I have to have patience, have maturity in my setup to know that it's going to grow. It needs to take time to grow older, become more patient to give me what I need, because I don't want to cause my emotions to come into stir, because when it comes time to pull the trigger, you have to pull the trigger. I'm learning that as I grow in trading as well. Price points are huge, because when you put your pips and your SLs and lot size to do certain things, it's all critical. Let's continue. Right here upon the closure of this candle is 9:55, which is the opening of 10. So I'm going to play this next candle, but no, the closure of this 9:45 is 10. So these two time frames are in sync right now. What I want to point out though is notice how on the 15-minute it looks like it's going bullish. It just rejected back down. My opinion looks bearish, but the 5-minute is actually giving you those bearish candles, especially upon the 30-minute time frame here. Let's put everything in sync so we can all be on the same page. This is what this looks like. So beautiful market structure, beautiful before this even came about. And we can go ahead and go even a deeper standpoint and hiding it like this. So this is what I was seeing in point in time. I wasn't in the market anymore, but etc. etc. We can add more confluences and making this into a better grade than just a C, because we know it's not a C, right? What do we have right now? We have a supply of which price came back and rejected in. We have a BOC, a break of candle of that supply, so we're going to add that in. We also have fib rejection dropping off from the 618 and 50%. We have engulfing candles inside of the zone. So the 30-minute candle right here is the actual BOC attached to the supply. But you have other engulfing candles inside. And what I mean by that, a BOC isn't engulfing, but you can have more engulfings than just one BOC. So what I mean by that, this closure from the 9:30 to 10 a.m. is when that confirmed. Before 10 a.m. even happened, you had this engulfing right here. Well, this isn't engulfing, excuse me. You had these engulfings right here. These are this is actually the one only engulfing that I'm speaking of. I'm gonna try to point out here. So it's not multiple. You can count this as an attachment to this 15-minute engulfing, but that's what I mean. There's more engulfings than just one 30-minute one. So you have this engulfing, you have this engulfing, and then you have this actual engulfing, which is the actual BOC. So this is why I'm attaching those two different ones. It's important to notice that and note that. What else do we have in terms of the list that we can add on? Right. Daily opening. We're right here at the daily opening, which is what this pink line is. So I'm not going to add that as a confluence yet. But when the price goes down, that will be a confluence in. And then moving averages. Moving averages is going to be the last thing that I add on. Making that into 1, 2, 3, 4, 5. Making that into a grade setup. Grade A. Boom, like that. And then bolting that up. It's not going to do it, but oh well. So now that I have 5 confluences, before technically I even get into the trade, because I'll actually say this at this point in time, a supply and demand or a engulfing for me counts as 2 confluences. And within 2 confluences, you can, for me, I can enter the market alone off that. So when I had this 30-minute engulfing, this is enough to just go in for a grade C, a 0.5 minimum setup on its own, as well as when I have, what did I just say, supplies. Oh yeah, when I have price come in, these are actually the same thing at the same time. This supply is getting confirmed out of here, so that will be that minimum reset up. But then this engulfing is separate as well, because when I bring this on, I'll bring up to identify. This right here is pointing this out. It's not an engulfing, but it's an LL. It's a type of DeLorean that makes out to be a portion. When this, you can add a portion of, if it was engulfing, had it in here, and then when it actually completes here is when you add in the rest. But that's advanced. I'm not going to get into what I'll go in and continue to say. We are at a grade A. So within a grade A setup, you can have, or for me, I can have 1.5 to 2%. So right here at the closure at 9:55, right at 10 a.m., I'm gonna go in, and where I put my stops here is huge because it's gonna determine what I'm risking. Now I'm gonna just say a risk range just so we can all be in an understanding of where I'm trying to say, not precise. I'm gonna say 10 pips because either way, from the closure of this candle to the wicket here, it's going to be 10 to 12. So I'm going to say that from a 10 to 12 point range is where our stop losses are going to be. And for me, I'm taking partials at a 1-to-1 because I'm learning to grow my emotions to hold in the trade longer. I'm noticing within my last trade being challenge that I took, I was halting myself by taking great trades, but closing the profits way too early before they even got to those trades. And with my losses, where that sometimes not even losses in some cases, I was closing the trade too early before I even hit my stop loss. So one of those lessons that I've learned is led to actually hit my level, because that's important for market structure anyways, where my stop loss is. But another reason is to let the actual profits come in. If I'm taking a partial, stick with me. If I'm taking a partial here at 1-to-1, and I close it early before it even gets to 1-to-1, anything that I was supposed to get of that partial is already cut off. So I'm chopping my numbers up. So at 1-to-1, I close 50%. And for me, based off my strategy with the engulfings and such, it should be 3 candles in. So remember, this is a 30-minute time frame. So 3 candles from the 30 minutes. So at 90 minutes, I should be at least at a 1-to-1. So we'll break this all in together. And with our grade A setup, we got our first candle in and boom, automatically hit 1-to-1. So I've taken partials And we'll go ahead and identify that. And then my next target is to go for the 2-to-1. And my 2-to-1 is where I am now closing the rest of my package of trades. But now the reason I want to break this trade down is because we're going to get into something interesting. I believe there's 3 opportunities of entries that I have here. Let's bring on the EMAs here so I can see where I am. We have also now at this point in time breaking the daily moving average. So I'm gonna add more in here just so we can see into Confluence what is happening in the market. I'm gonna put daily open. The 4-hour is also trending as well. We are also, of course, trending at this point. And the other thing is pretty much nothing else. I think this is technically a VOS break and retest of what it is going into the supply, but we're not going to get into that. We're in full Confluence here, full trending. And I'm saying that to say, when the market comes back after, let me just say, notice what happens after the market does this 1-to-1. So this is one candle. Once this is 5 minutes in, 10 minutes, 15. So notice after 3 minutes, we have now retraced back, and price is now taking us out the trade, because when I go to 1-on-1, I at least put my trades to break even. For the other traders that don't, notice what happens. Price comes back, but it does not break the structure. In fact, what happens, you can kind of say what it breaks it because it technically wicks the high, but it immediately comes back down, gives another smaller engulfing. This is an engulfing. For me, I utilize this and identify my structure because the opening, because the closure of that bearish candle closed past the opening of the bull candle. So that is a breakage, BOC in my opinion. I wouldn't get in right there necessarily. I would need to see price engulf on a different and higher time frame, give me more of a confluence. So after I saw this next candle close, solidifying the 1030, which I can now bring this candle in. And when I see this candle wick down and close like this, lining up with this as well, this is your 15-minute I was about to say your 15-minute BOC lining up with your supply. This is actually a double. I'm gonna bring this to the back and lock it because it's getting annoying. I'm actually just gonna leave this on the 30-minute time frame only, just so I don't have to deal with it, because that was definitely annoying. The enclosure of this counter right here also solidifies the supply, which allows me to re-enter into the setup again. So I just played it off that first one, but now we got them double ups, baby. And the cool thing about a double up is I have the opportunity technically to go full risk, but me being smart, I'm only going to go half risk, because I'm going to utilize my trades smartly, especially at the starting of an account or wherever when I am in the journey. In the beginning of my process, I need to be smart with it. Now, of course, you can risk however much you want to risk, but at the end of the day, an entry is an entry. So we have a re-entry here. And the setup grade of A with more and full trending confluence, I probably would go crazy, I'm not gonna lie. But it is what it is. That has popped up there. I'm actually gonna add it on this time frame so it can be seen lower. Boom. 3, 1, 2, 3. Within 15 minutes, we have already hit the 1-to-1 zone again. And the beautiful thing about it is, that we are once again playing pretty much the same setup. I'm not going to redraw it because it's doing the same thing again. But we've hit 1-to-1 for me. I would have closed 0.5%, risking 1.5. I would have closed 7.5%, got taken out at break even, re-entered the trade again at 1.5, even probably 2%. I'm not gonna lie. Let's just say I entered at 1.5 of minimum, even though I technically had full reasoning to go in at 2% here. I enter in at 1.5, and I go in and close here at 7.5. So with already price just doing half the distance, I would have made 1.5%, half a percent, 1.5%. Now, me growing as a trader, I'm gonna see this and say, okay, we're having full confluence on 15-minute time frame. I should at least, right, at least have the patience to take this to a 2-to-1. So if I'm risking 1.5, the minimum I'm gonna get is 3%. So just by holding that alone, and look what happens. It doesn't do it within, you know what I'm saying, 3 candles of the 15-minute time frame, but within what is it, 3 candles on the 30-minute time frame. Right, does it? Boom, yeah, 3 candles within a 30-minute time frame, it does. So you just need more patience within whatever you're doing most of the time, and it usually will get to your target. Let's watch it play out here on the 5-minute. The main and cool thing I like about it, though, as we bring back our EMAs, is we're seeing that we're in a yellow brick road. We can see that it came back and touched that 13 EMA, but still had enough strength to continue down and be pushed lower and lower into the market. I'm actually going to do a full replay here now and kind of once again talk back everything that happened. There is a lot on the screen, so I'll just kind of flash EMAs in and out. We have a retracement back into the fair value gap, filling in, also touching the supply. Price was not strong enough to withstand it, but it does give you the reaction down, then give you an instant reacting back up. Look how we're in the New York Open, then boom, pushes down, rejection back up. Notice how that gave it on the 30-minute candle, then came in, confirmed, gave you that full confluence after New York Stock Exchange hourly opening at this point too as well. Major engulfing candle, major volume, trending, everything at this point, pushing the market straight down. Great Friday close in my opinion, especially when you see how the 4-hour closed. Tough. Patience here. Patience. It never even really gave you a full exit entry as well upon the 13 EMA. That's where it would have been. So let's say I didn't necessarily close right here, or I didn't close right here. Upon the actual selling point of the shift of the EMAs, let's go ahead and make this into a fuller screen. Right here, as you can see where the candle crossed the 50 EMA, and these are when the EMA is open. This is where you would call a shift upon the D-low. I'm not going to get into all of that. And then right here, notice is where you have your first blue candle that closed upon the 13 EMA. This is how the exit strategy would be. And just, risking this alone, just like that. A 1.8. Beautiful. Beautiful. Because it was allowing trade to breathe, going 2 hours, 24 bars. My trading time right now is from 5 to 10 minutes. Now that's one thing, because that's around the entries of the 5-minute time frame that I'm trading. But your 5-minute map, your 5-minute outline is telling you the bigger and outer story when you know how to look at it. That's the cool thing, man. I just want to come on here and break this trade down, break down the confluences, break down how I see the market, and other simple things like that. Before I end this video, though, I want to just come back to the full screens here. There you go. I was on a different chart. That's why. Okay, so here's the other one that I was doing. What I want to say is just looking at the different markets in comparison to what all had happened. Look at the difference between, once again, like AU and pound dollar. Now, pound dollar had a little bit more of consolidation, in my opinion, but it's still giving these active BOCs after 10. I'm really beginning to notice the patience upon waiting to let New York happen. After New York, bro, it's just like a boost, bro. It's just like a boost. Look at this instant engulfing over that, man. Beautiful play. However you want to look at it, below the daily rejection, probably aligning with the hourly as well. Now, actually, in time, it's kind of hard to know what you're looking at. Me, I see this big red cloud. I see the 100 and 200 EMA right here. Makes me want to zoom out to then see this. You know what I'm saying? Price is always telling a story. You just really have to know. Look at this rejection of the 50%. Confluence, man. Confluence. Look at that 5-minute candle break and retest. That's your BOC right here. This is your extension play. That's how you would play that. Just marking for this little boom right here. And then playing the money. Where's my money? Boom. Right there at that 30 if you was questioning. Something like that. Where's the 2? Where's that 2? Something like that. Boom. Just like that. Went all the way to the 1618. Look where it found that floor. Look where it found that floor though. Sheesh. Anyways, beautiful, beautiful, beautiful Friday. And we see what happened in the currencies. Why is this chart out like this? The indices did the same thing, just a little bit more wide, a little bit more exaggerate. Not a little bit, way more exaggerate in the way it wanted to. On the wrong day. Oh yeah, no, I wouldn't even say. Not really comparison. But anyways, appreciate you, man. I really want this breakdown AU. I'm just kind of talking and doing more now, making more sense as I grow more in my trading. Hopefully, I'm able to explain it better and outline it for a different visual representation. Appreciate you, man. Peace. Love.